Welcome, everyone, to a Dose of Wisdom Real Estate Podcast. I am your host, David Stein, and today we have the privilege of having on our show Joe Fairless. Joe has achieved extraordinary success in the real estate sector. Ashcroft Capital, the firm Joe co-founded, has over $2.7 billion assets under management in the multifamily space. Joe also has the longest running real estate podcast called the Best Ever Real Estate Podcast. He's also an author of a number of real estate investing books, as well as an adjunct professor. Joe, thank you again for coming on the show.
Hey, thanks a lot, David. Looking forward to it.
So my first question to you is, what's the backstory to how you got involved in real estate?
From Texas originally, moved to New York City right out of college. I wanted to compete with the best of the best in advertising, which was my major. Started making $30,000 at a advertising firm on Madison Avenue, 51st and Madison, right across from St. Patrick's Cathedral. Prestigious gig right out of college, but didn't make any money, relatively speaking.
Right.
So I needed to climb the corporate ladder, which I did. And as I climbed the corporate ladder, I kept my expenses relatively low for New York City standards. I always had a roommate throughout my 10 years of actually my first year I didn't, and then the last 9 years I did have a roommate while I was living in New York City. And my friends would make fun of me. They said, "Why are you still living like a college kid?" When I was 10 years removed from college, but I was saving money and I was
Right.
buying single family homes in Texas. And then I
Mhm.
started teaching people how to buy single family homes while living in New York City. So live where you want to live, but invest where the numbers make sense.
Right.
And so I started teaching that, and that's how I got into real estate.
Okay, cool. So how did you veer into multifamily from there?
When I was teaching that class, I had a friend of mine and also former boss of mine
Mhm.
attend the class on how to buy single family homes in cash flowing markets. And he said, this is interesting, but if you ever do something larger, let me know. And I
Right.
heard that from a couple people. If you ever do something larger, let me know. And it finally clicked with me. I have customers before I have a product. I
That's
have
great.
investors before I have a real estate project for them to invest in. So, the single family homes didn't make sense to bring in partners, just the numbers weren't big enough.
Mhm.
And so I looked at apartment buildings and then combined that with I ended up buying four single family homes. And I had four single family homes, but I would make $250 a month.
Right.
But when someone would move out, then that would be $5,000 worth of move out expenses
It's a
or
higher
to get
amount
it
of
make
risk.
ready. It'd wipe out the profit. So on the spreadsheet, it looked great, but in the bank account, it wasn't making much money. And
Right.
so I realized I needed to scale. So those two things
Mhm.
made me think, you know what, I'm going to look at apartments.
Okay, great answer. What's your view on the importance of having a mentor, and what's been your personal experience with cultivating those relationships?
Well, my view for having a mentor is that it's necessary and it's important for a couple things with mentors. One, I have chosen, I've had paid and unpaid mentors.
Mhm.
The paid ones I enjoy because I can selfishly ask them questions and
Right.
not feel like I have to reciprocate in anything other than my money.
Right.
And so that's great. And um, then there's a certain level of expectation that I have from a paid mentor. From an
Mhm.
unpaid mentor, that's not the case because I am much more aware and sensitive with how much time I take of theirs because time and ultimately attention is our most precious resource. So mentors, paid and unpaid, have been
Mhm.
instrumental in
Right.
my path. And what was the second part of your question?
So what's been well, you explained it, what your personal experience has been with cultivating those relationships, those mentor relationships.
Yeah.
So, Do you believe, like, if you were to take on a paid mentor, do you believe that just paying them like a flat fee is enough to incentivize them to want you to succeed, or like, what is your view on that?
Ultimately, no one's going to want me to be as successful as I want to be, uh, more than me.
Right.
So ultimately, it starts with me, and that's with everyone. I mean, we're going to be our biggest fan. We have to be our biggest fan because
Mhm.
paid mentors come and go, unpaid mentors come and go, relationships can come and go. Hopefully, we have some long-term fulfilling ones in our lives because that's what life's all about. But um, yeah, I mean, to answer your question directly, paying someone certainly helps them have more incentive to help us succeed. But I have a consulting program, and people pay me
Right.
to to teach them how to do it. And it's about 40% of the people have real results, and
Mhm.
60% they sign up, it's a shiny object at the time, and then they fade away. Life happens.
Right.
And so I think it's less about the mentor. The mentor certainly needs to explain and have systems and relationships, and explain how they got to the point that they're at and how it relates to you and each step, and be there and be actively doing it.
You need to
All
have
that
the
needs to be
resolve to
present,
succeed.
but ultimately it's about um the consistent mindset that we as entrepreneurs and real estate investors must have day in and day out, uh, because we can't be relying on anyone else to ultimately hold ourselves accountable for the results. We can have help and assistance and pay people and other things along the way, but ultimately it's on us.
Right. Okay. So you've had phenomenal success in raising capital for your projects. What are some tips you can share with our audience on effective capital raising?
The more you are yourself, the more magnetic you become. We all are especially talented in one or two specific areas, very nuanced areas. And so it's important to identify what those talents are, and then see how they fit within the construct of the real estate business,
Mhm.
and then double down on those areas. And if you don't know what your talents are, then ask two or three friends, what are you really good at? And you're gonna get some smart aleck answers, I'm sure, from a couple of your really good
Right.
friends. But eventually, once they come around and they give you a real answer, you ask three or four, five people, you're going to sense a pattern, or you're going to see a pattern. And ultimately, with our business, you've got to have money, you got to have a deal, and you got to be able to execute. So
Right.
those are the three categories. So where are you within those three? And then you asked the question about raising money. Well, maybe you're not the money person.
Right.
Maybe you're not good at marketing. Maybe you're not the best, or you don't enjoy it. And ultimately, it's what of those three areas seems the most effortless to you,
Mhm.
just off the top of your head. And then, oh, okay, that seems the most effortless to me. It's probably where your skill sets are gonna fall into that category.
Okay. So let's assume someone doesn't have a real estate background or not a strong one, and they are very good at marketing. Like, what should they know, if anything, about trying to raise capital?
I would say they shouldn't raise capital for real estate if they don't have a real estate background, but they're good at marketing. But I think what they should do is they should go find people who know real estate, and um, be their marketing person,
Right.
and then learn the business that way, learn how to attract real estate investors, learn how to speak to real estate investors or prospective investors. And then as they get acclimated to the real estate business, then they start branching out and doing their own business, by bringing on partners, joint venture partners, or bringing on employees who help with the other areas.
Right. So, what was one of your biggest challenges or setbacks that you faced in your real estate career, and how did you bounce back from that?
After I bought four single family homes, I then did my first syndication as a 168 unit property in Cincinnati, Ohio. I raised money from 12 investors and
Right.
the project lost money.
Mm.
I paid back my investors plus a 14% annualized return out of my own pocket
Wow.
after it was done. And I did not have the money to pay it back whenever we closed, whenever we sold it. So I had 12 very character building conversations with those investors, and I said, I don't know how long it's going to take, but every month I'm going to pay you back whatever I can, plus
Wow.
14% eventually, annualized return. And um, some were rightfully so skeptical. Some were like, okay, sure. Others, were somewhere in between. But I
Right.
did. It took me a couple years to do it, and I learned ultimately on that first project, first syndication. I was trying to do it all myself.
Right.
And I learned that's not my skill set. You're swimming with sharks in the commercial real estate business. So you better come with a team that has decades of experience that is aligned with your interests.
Mhm.
And I made every mistake in the book, and I learned, and I have attempted not to make those same mistakes again. And we've done a pretty good job of navigating that and adhering to that.
Okay. What are some of the ways that you have worked towards creating a competitive advantage over other players in the multifamily space?
Well, first thing is that we are vertically integrated. So we have our own property management company. We have our own distribution center. So we buy in bulk renovation materials and we ship them overseas. And then we have a warehouse that we kit those items, and then we then send those to each of our properties. So we by buying them in bulk, we hedge against inflation first, because we're buying them in bulk, and we have those materials at one time. The second is that we mitigate the supply chain um, constraint because we're kitting the material in our warehouse, and we
Mhm.
have control over that. And so what the result of that is it's more reliability. It's more reliability on how we make projections in our underwriting. It's more
Yeah.
reliability on actually delivering on those projections in our underwriting. That's one. We also have over 100 testimonials from passive investors on our website. So over 100 people have said, yes, I would like to share my experience about investing with you with others. And I don't know any other group that has had that many investors voluntarily share their experiences about investing with the group. And you go to ashcroftcapital.com and click I think it's a testimonials page. And so that's another way, because when investors say, hey, can you tell me more about your company? Yes, and let's hear directly from other investors like you who invest with us, because ultimately what we say does matter, but what your peers say about us probably matters even more.
You wrote the best ever apartment syndication book. Firstly, I want to say I read it myself, and it was incredibly useful. Um, you have a gift for conveying principles in an incredibly clear way. What was the impetus for you to write that book?
There wasn't anything else like it in the marketplace, and I'm not sure if there is today a step-by-step process for how to do apartment syndication, and not only from a technical standpoint, but from a practical standpoint.
Right.
How to actually put things together, what to think about. Um, and I did a lot of research. I mean, I'm very proud of that book.
Right.
The other two books, the best ever advice, volume one and volume two. Yeah, volume one, yeah, I'm kind of proud of. Volume two, not so much. But the syndication book, that's my baby,
Yeah.
and I'm very proud of what all the research that went into it. Because I what I would do, I would read the Amazon reviews from all the other syndication books.
Yeah.
And I mean, I've read more Amazon reviews from other syndication books than anyone else on earth. And I read what people liked and what people didn't like, what they wish they had in those books.
Right.
And then I simply backed into what the market needed to have in a syndication book, and I put it all together in this one.
Yeah, it's very smart. Like looking to fill a need and seeing what people want. All right. So my final question to you is, what advice would you give to someone that's starting out in real estate now?
I would say, Robert Kiyosaki, when I interviewed him for my podcast, I think he mentioned on my podcast, or maybe it was after, but he said the richest people in the world build networks and everyone else looks for work. And
Right.
that's always resonated with me. So I would say for someone starting out in real estate, it's less about the tactics, although they matter. But tactics are easier to learn and quicker to learn than
Mhm.
relationships are to build. And so
Right.
my suggestion is get busy building relationships with those in real estate, and do that through some thought leadership platform, which I write about in the book that you referenced, the
Right.
syndication book, Best Ever Apartment Syndication. And so focus on building out your network, adding value to others, and then the tactics are going to come.
Mhm.
And again, they're faster to learn and easier to come by than the relationships. And the relationships not only are the ones that move you a couple decimal places on your net worth, but it's just more enjoyable. That's the enjoyable
Right.
part for me, at least, of the business.
Yeah. Okay. Great. Great advice. And thank you again for taking the time. Uh,
Well, it's been a pleasure. Thanks a lot.
hopefully we can have you again sometime.
Awesome.
All right. Take care.